What's the kind of expectations I should set of how many people I need to talk to before I start seeing an investment? To be able to raise 500,000 people, how many people do I need to talk to? How many no's am I going to get? And just, when do I, minimize my frustration?
Yeah, I think the drop off rate is probably like what it could be anywhere between 20 and 3% at every phase, right? So I mean, you know, two things, right? There's the audience and then the qualification. So basically, you get the calls generated and then you reach out to people. You're going to have like anywhere between it could be 3 to 20% that are interested in having that initial call. So that's what we say when the qualification is decent, right? You made sure that you did your research beforehand. You're not just blasting it out. And after the 3 to 20%, then you're talking to, then we're saying 1 in 10 of those people would be the ones who are interested in actually moving to the next step and then seeing the information and the NDA and all that. And then
Yeah.
after that, then you're going to have 1 in 10 of those people that are interested in actually like signing the LOI or signing the document saying that they'll invest. And then after that, then you have like, another drop off. You have like probably 1 in 5 people that actually would put the money in because they can sign everything and some of them they don't put the money in.
Right.
So we're talking about the 1 in 10 four, right? Whatever 1 in 4,000 probably,
Yeah.
depending on your skill and how much you qualify the people.
Well, so what's better? Here, let me set some context for this. I saw an interview where Alex Hormozy talked to Grant Cardone, and Grant said, I don't like to take money from big check writers anymore. And Alex asked him, why? And he said, because they're meaner. I like to do in Reg A's and 506Cs. So what if I'm out there trying to raise $500,000 and the other investor on the other side says, yeah, I'll write you a check. I like your thesis. I like your idea, where you're going and who you are, and I'll give you a check for $500,000. But I'm only trying to buy a $1.5 million company, and that's already 33% so of the company. So what do you have any recommendations on that? Should I take the money or should I look for smaller check writers?
Well, I mean, I think it depends on so for Grant Cardone, and I watched that a really good video. Grant Cardone had a lot of status delta, we call it, right? So he was looked up to as almost like, I hate to say it, almost like a god to certain people, and then he's huge. And then because he has that status delta, it makes more sense for him to do the Reg A's, and the Reg C's, CFs. When it comes to the which somebody should do, I think it depends on how certain that they want to raise the money. Because if you raise less money from smaller checks, the certainty increases, right? The probability increases usually, but then the amount raised and like it can actually be less because like if you have like less that money that you want to raise, the probability just goes way higher that you actually be able to raise anything. But then if you want to actually just get a large check investor to do everything, the problem is that you're risking the probability of anything happening. So if you really need any money to actually just go in a deal, then I just recommend, and you have some form of like either prestige or you're able to convince like a mass audience, then just go the small route. But then if you're in a position that you want the big check investors, because you don't want to deal with the complexity. I mean, look, Grant Cardone, amazing guy, but then he's dealing with lawsuits and he's the complexity of managing all of them and setting all their expectations because a lot of them can sue because the big guys, they have a lot of capital that they're willing to lose. Then you can take the big guy instead.
Yeah. The bigger you get with 75 million followers, the more naysayers and
Yeah.
lawsuits come your direction. Yeah.
It's just natural. Like 1% of people are probably have a problem with everything. So
All right. Yeah. How long do you think that process will take?
yeah, so sometimes ideally it can take anywhere from 2 months to 9 months depending on the deal. Sometimes it's really slow, so that's why we recommend people to just have like an ongoing like investor load up period, before you funnel them all to one deal. But yeah, it's not a quick process.
Yeah.
It's much slower than that, unless like unless there's something like amazing about the deal that is just earth shattering, because the person would have to make sure that the deal fits in the mandates of the investor. So yeah, it could take anywhere from 2 to
Yeah.
nine
So
months.
if it took 9 months, I mean, nobody's going to, if I see a nice deal on Biz Buy Sell and nobody's going to, the seller's not going to wait around 9 months for me to raise that down payment because he's just going to move along. Should I just raise a blind M&A fund for bigger acquisitions?
Well, most people, they struggle with getting the credibility to get the investors to actually send people money that they trust that they would invest in whatever they want.
Yeah.
So the way that we recommend, if somebody's doing that, then do it the Dan Pina way of building like an amazing team and quote unquote board. Dan Pina, a lot of you folks know the fellow, the Scottish,
Yeah, he's
attire.
the drill sergeant that if you've been in the military, I don't really like people yelling at me anymore.
Yeah, he seems like Dave Goggins of M&A basically. But what at the end of the day, like, it's hard if you don't have a good team because the people that we're working with, they're actually setting up blind pools. They've raised hundreds of millions before. That's the only way that they're able to get people to trust them to do that. Otherwise, they're just doing one off. So I think what people should do, they should always be marketing compliantly, to investors in a way that is obviously compliant and it's tricky, but then there's a way to do it, and then just load up your database of investors, load up your database of deals, and then when the time strikes, then you funnel them all. And that being said, sometimes the SBA can take long too. So I mean, instead of just waiting for the SBA, it's good to just load up the equity side as well. And I think and ultimately, to be honest, it's best if you can just do it like it's best really if you can just get like a seller carry and get some debts. Then you honestly avoid all this, and then in the future come back to an M&A fund. That's what we tell some people too, because the point is not for people to shoehorn different products, for Regulation D if you don't need it. The goal is to get the deal done. So
The goal is get all the ends.
yeah,
Thanks for watching this video. Make sure you're a subscriber by clicking on this button right here down below. And if you want to watch more serial acquirer interviews, click on this button right here. If you're ready to buy your first business, get my course at dealflowsystem.net right here. Take care. Cheers, John.